And we're back Wednesday morning with Paul Capetta. How's it going, man?
Doing great, Frank. How are you?
Fantastic. We are a third the way through June. Hopefully the most boring part of June. It's been a rough go, volatility-wise, the last week or so. Not so many big moves, but we have some big data over the course of the next 7 days. Huge inflation data today, and then a week from today, big FOMC day. But what's going on in your world?
I'm just trying to enjoy the summer. It's like finally, I think we talk about this every week that we're progressing into summer, and I think we're finally here. Yesterday on the patio after work was exactly what we needed out in the beautiful Chicago weather. So.
And today you might get more than you bargained for with 85 and starting to feel a little sticky here in Chicago.
I always try not to complain because it's like it could be snowing, right?
100%.
So
I've given into the sweat. I don't care. Sorry for all coworkers. We had a company meeting yesterday, and a lot of people showed up, which was great, and we were pretty tightly packed in.
Yeah.
And a couple different points, I was like, man, I don't think I smell great, and I hope no one else is noticing. We need to be burning like incense or something at some of these summertime meetings,
like
so that
little candles that we can get going. Yeah,
covers the smell a little bit, because we also have some characters with there's some exposed toes rocking in the office. That can be something, and that's no judgment, but when you get together in a tight group like that, it can be
not my cup of tea, but no judgment there. Whatever makes you happy.
Excited about the summer. I'm excited for you to get out and enjoy it. You're a big golf guy. I'm just a big walk guy. A lot of people ask me what my summer hobbies are. It's as simple as just walking around. A lot of flat land here in Chicago that you can traverse pretty easily. Not like San Francisco or those, West Coast mountainous areas that are so beautiful but hard to stretch your legs on. But while we're in here, Paul, let's take a look at markets and see what the hell is moving pre-CPI. If we could pull up the platform, you will see pretty unchanged action, although some interesting price points that we're getting to. And I'm looking at you, dollar yen. We pull up the 15-minute chart, Paul. Right there at the highs for this dollar yen market for the last few days of trading, for this week of trading. You called it out before we came in here on the show. Ding, 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 right there at the 145 price. Once again, obviously we don't give trade recommendations. We don't know where the hell any of these markets are going in the future. We just try to give you as much information as possible. But as we enter the upside zone, whatever you want to call it here, of 145 plus, what are you thinking for this dollar yen? And I'll give some more context for why this is so interesting as Paul chats to us.
Yeah. So you got 145 is almost like a magnet, and sometimes it's very interesting going into really big data releases when we get right to that kind of key level, because you don't know what's going to happen in kind of this binary event, which is CPI. So obviously you have that kind of risk that this can either break through that 145 level or retrace off it really quickly. And when you have the catalyst like CPI, that kind of leads to a very interesting market. This one will be probably the one I'm watching going into CPI. Usually I watch Eurodollar going into CPI, see what the initial kind of market move is, but this one will be probably today's slicker.
And yeah, before going deeper on that 145, I'll bring up Eurodollar and just talk to the peeps about why this maybe isn't as interesting here. And it's just because we've seen a little bit of flat action here at the 114 level. We've been up above 114 here. Not so interesting of a range in this market relative to that dollar yen, in my mind. Now, you might be at home if Eurodollar is your market of choice here in Forex. Obviously, a lot of good reasons for it. It's liquid. Currently, one of the low margin pairs of the major currency pairings there, the popular USD pairs for sure. But we have really just been doing a dance, Paul, of like 30 to 40 points around 114. Whereas you go back to this dollar yen market, and I mean, we're talking about the dollar part of the equation being at the upside of its range for the last couple of weeks here. Even if you take out this run up here of 2 days, essentially 1 day of rallying and then 2 days of sell off above 145. 145 is really the high for US dollar in this pairing, going back to April, where US dollar really broke down amid more volatility around tariff talks and everything else. Just two-sided action here, Paul. Like, this is a healthy range. Even the last 2 weeks in this market, getting down to 142.5 and then back up to 145, down to 142.5, back up to 145. It might not look like a lot, but that's a couple hundred points of range. Whereas you go over to this euro dollar piece, and in that same last 2 weeks of time frame here, you've got less than 100 points of range. You have one move where we got down to 112, and then they immediately bought it back up to 114. So I agree with you, looking at that dollar yen going into this meeting, probably one of the more interesting ones, just because a lot of these other markets, looking at EU pound as well, are nowhere near recent dollar highs. They're all, for the most part, sitting near highs versus the dollar, whereas that dollar yen is at least giving you some two-sided action. That dollar Swissy is also giving you some two-sided action. But where do you want to go next before we go into the actual CPI data? What else is calling you on a day like today, going into a week-long stretch into FOMC, where stuff might start shifting around into that meeting, but especially off this data point?
Yeah, so I mean, obviously the dynamics have changed. Like what we're looking at, I mean, 2 years ago we were just looking at inflation data, where interest rates were headed, and now there's kind of risk on, risk off with the tariff talks. Are we on with tariffs? Are we off the tariffs? Twitter's all over the taco trade. Trump had said he might be able to make up things with Elon Musk this morning, which I was like, okay.
Over it.
That was a 1 week thing, I guess. All right. But yeah, no, actually, I was talking with Glenn yesterday about kind of silver, and then I was like, let's look at Aussie dollar. What's the correlation there? So this is an interesting one when you talk about multiple dynamics as a commodity currency, and then you've got the tariff talks, and then you've also got this interest rate story going on with inflation and whatnot in the U.S. economy versus the Australian economy. There's a lot of things to look at, but we're kind of at another kind of round number of the 65 level, and we're right there going into this big event. So this is another one we know it can get volatile really quickly, and it'll be definitely an interesting one to watch, and one that gets you. It'll be interesting if we can get back to 64 quickly, or if we break through that 65 kind of decisively.
100%. And yeah, we'll see what Glenn gives us on those correlation numbers between precious metals and this Aussie market. Historically, you've seen a positive correlation between gold prices and Australian dollar. Recently, I would be kind of surprised to see as strong a correlation. We talked about it a little bit either earlier this week or last week, that the correlation seems to be very strong right now between this market and Chinese equities in particular. And just, I mean, looking at this daily chart right here can kind of tell you a little bit of that story. Are Chinese equities, Australian dollar, and gold and silver broadly moving higher the last several weeks? Yes, but gold and silver prices are trading through multi-year, if not all-time highs, depending on the precious metal that you're looking at. This Australian dollar, nowhere near that. Chinese equities, nowhere near that as well. And even just thinking about and looking at the day-to-day, it seems like, and this is relatively anecdotal, but we'll get some numbers in tomorrow with these correlations when Glenn jumps on to confirm or deny some of this stuff. It seemed like even on a not only a day-to-day, but like intraday basis, you've seen Chinese equities turn for the upside, turn to the downside, and Australian dollar and Kiwi seeing similar price action. And this is a great one to look at pitted against that dollar yen. If you're looking at popular dollar pairs here, because it's so different. Couldn't be more different of a pair to look at, including the U.S. dollar, because this one, as the inflation data comes out and as the market digests it today, and there's more stuff that comes out from Trump or whoever going into next week's FOMC, this market is going to move more closely with equities and where equities are taking this data in. If the inflation print today is bullish for equities, I wouldn't be surprised if this Australian dollar market tries to get to 65.50, maybe heads towards 66 for the first time since November, December of last year. If that number is bearish, maybe we take another trip down to 64 cents, whereas that dollar yen market, so many different dynamics currently in that one. The interest rate piece would be a big part of it. Is the inflation number bullish or bearish for U.S. short-term rates? That's going to affect it. But also there is a little bit almost of like an equity kicker, Paul, because that yen can be highly correlated to volatility.
Yes, absolutely. And if you're looking at us and you're saying, well, I don't really know where inflation is going to be today, you could just neutralize the dollar with us and trade Aussie yen and get into that one. That would be
it's been an interesting
one. And I'm going to guess this one is probably up quite a bit. Not as much as I thought. Okay. But again, we're just looking at these charts, and I don't look at this one or follow this one pretty closely, but we're kind of right at that 95 level, kind of whole round numbers. We talk a lot about it. They don't necessarily mean anything. They're not any sort of definitive in the market. That
relatively arbitrary. Yeah.
Correct. Absolutely. But they're interesting to look at and watch to see where the market trades through. This is another one, if you didn't want anything to do with inflation, which I wouldn't blame you, because I think it's kind of a tough call right now if we're still seeing inflation, if we're not. But this one would be interesting to see what this one does, especially if we get some news out of the U.S. and China trade talks that happened in London yesterday.
Great call there, because this, in my mind, would almost be like a super equity bull kind of case, right? Because now you are pitting this Australian dollar that, if you strip out the U.S. dollar part of it, Australian dollar, like we've already been talking about, tends to have a correlation to equities in general, tends to have a closer correlation to Chinese equities, and a lot of times can be used as a proxy for that Chinese equity trade. Yen, historically, and increasingly in the last couple of months, there was a time period between 21 and 24 where the yen correlation to equity volatility kind of broke down, because the yen was just getting hammered on having 0% interest rates and everyone else having high interest rates. And so the tie to equity volatility was not so much there. But recently, and if I go back to this dollar yen chart just to show you a little bit of this, what is happening, Paul, in this period here is we're seeing equity downside, and we're seeing S&P 500 volatility, or the VIX, running up, and the yen is gaining against the U.S. dollar in that period. Now, it's a pretty similar move here in this Aussie yen piece, but the moves, it looks like, have been relatively more muted, because this Aussie has been kind of stuck in the mud a little bit against this yen. So again, today with the inflation piece, if that comes out to be bullish equities, maybe you see this Aussie continue higher. If you layer on top of that the Chinese-U.S. trade talks are alleviated, and that's also bullish equities, but also bearish volatility, bearish VIX, this market would maybe have some significant legs to the upside. Flip side of that coin, this inflation number comes out kind of unchanged equities, slightly bearish, and that volatility kicks in again for equity markets, then this Aussie might see some significant downside against the yen. Yen might take over once again. Maybe that U.S. dollar yen piece breaks down back below 145, even back down to where has been the low recently, 142.5, but 140 has been the real low that everybody's been eyeing.
Yeah, absolutely. And even, I guess you could take it a step further and say, maybe I don't want the Japan risk because
Sure.
there's always risk with rates, and we could look at something like Aussie Swiss franc, because this one,
Wow. I'm going to have to scroll for this one, aren't I?
Yeah, you are. Right there.
I love it, though.
Yeah.
Deep cut.
Yeah, you can. I mean, that's kind of the nice nature of these cross pairs is you can take some granular views and you can kind of pull out the areas you don't want to worry about.
Sure.
If you don't want to worry about the dollar, that's why they have these crosses. This one, again, another real interesting one, really looks like kind of your equities chart, but we haven't necessarily got back.
Value play, if you will.
Yeah, that you could argue there's a value play. There's obviously some more dynamics with how Switzerland sits in the world, which is why it kind of holds on to some of its strength, especially given the current, I'd say, global economic climate, we'll say.
Sure.
So that's kind of a very interesting one. This one got really beaten down during the Liberation Day times of April.
This is a huge move in here. And I'm excited to put some more historical data in this in just a second. But I love what you've done here, Paul, which is if you're looking at my top tab here in the top left, we've got 3 flavors of Australian dollar, essentially. The first, obviously, tends to be the most popular, this Aussie USD. And you've seen that breakdown here below 62 cents, below 60 cents even, lows for the last year or so of trading, and then a nice bounce back to kind of middle of the range. Now, of course, if I add data into this, it's still relatively low if you're looking back pre-2022 and especially pre-pandemic. But if you're, looking at just the last couple of years here, back to middle of the range, given these low prices. Aussie versus the yen here, big move to the downside. Same thing that you saw here. Nice bounce back, but not necessarily back to the middle of the range. Not anywhere close to Aussie versus yen highs that we saw about a year ago, summer 2024. Now you go to this Aussie versus Swiss franc, Paul. We haven't even regained the losses of April. Now, of course, it has to be noted to everybody that the cheapest currency, or I should say, if you're looking at longing Australian dollar, the place where it is the cheapest you don't get any added edge necessarily, right? Like it doesn't guarantee you like, well, if Aussie gets slammed again, this won't get slammed as hard as everything else. Or if Aussie has upside, it's got the most upside potential. It's just interesting that, if you were looking for a long Aussie play, that Aussie versus USD maybe has some room to gain, has like some range that it can still see on the up and downside. But as you go out on the risk curve, so to speak, versus some of these safe haven assets, the relationship, in my mind, almost gets kind of more volatile.
Yeah.
Wouldn't you say? Because like Australian dollar and US dollar in today's world are both relatively risk-on currencies. So when you pit them against each other, there's some canceling out. Whereas Australian dollar versus Swiss franc, Paul, Swiss franc, absolutely not a risk-on currency. Actually, you've seen it gain extraordinarily against a number of pairs, including the US dollar, as risk-off trade has been witnessed in the last couple of months. I'm going to add some more data here in a second, but do you see that dynamic as well of like, this is pure risk-on currency versus pure risk-off currency?
Yeah, you kind of nailed it on the head there with kind of how this pair would be constructed. And you look back at some of these days,
Jesus.
especially in 2020, where this thing was moving. You look at the 2020 pandemic. That's a 1,000-point run in a couple of weeks. There's a couple times I bet you in 22 that this thing got super volatile. I remember one of the kind of days in 2022, and I remember it very fondly because FX volatility was exploding with inflation. Interest rates were all over the place. And I looked up, it was like about middle of the afternoon. I was like, dollar Swiss franc's down 3%. I was like, what is going on?
See two major currencies pitted against each other, and one of them is moving 3% against another one in a day is kind of unheard of.
Yeah, it's a extreme move, and like I mean, we could run the data and look at how much standard
Holy
deviations.
smokes.
This one is obviously that's when things go completely risk off, and you get these kind of extreme, exasperated moves. And even just looking at the candles here, you see the wicks and the weeks where we get these kind of risk off moves, and they come right back to end the week. So
This one right here in August of last year is, well, first of all, the 3 weeks beforehand, you saw a move from 60 cents down to 55 cents. But to Paul's point, this is a 1 week candle where this market went down below 54 and then closed the week above 56, and then the next week closed near 58. These are several hundred points. And we're not, at this point, pitting Swiss franc against like peso or rand or anything like that. These are two currencies that are seen as being major currencies pitted against each other. You've got if you're a price extreme hunter, obviously you just saw me add all this data in, and this is still considerably low. If you're a day trader or volatility hunter, this is a great call out here, Paul, given how big the moves that we've seen between these two. But again, it should be disclaimed that this is maybe not a pair that everybody looks at, because the dichotomy between risk off and risk on between the two sides is so great. That's why you're getting such large moves here. The last thing I want to do is, before actually going to the CPI data to look, it is worth noting that today is Wednesday, and all those people that have been fans of the carry trade content that we've been putting out and have been getting more interested in it, you're seeing some big moves in here, or big data points, I should say, on the carry trade, because this is a Wednesday. You get the weekend carry, right, Paul?
yeah, you get the weekend carry. Next week we're gonna have a weird week. We've got a holiday on Thursday, so it's gonna be a little bit of a weird week for swap rates.
Monday will be like a 2-day. Will it be Monday night?
Yeah. We'll have to look at, I believe we have it on our website.
For US dollar pair. Yeah, we'll take a look at it on Monday.
Calendar. Yeah, because it gets a little weird, especially with midweek holidays. So kind of, and I'm not sure if it's a banking holiday. Sometimes the holidays get weird. Mm-hmm. We've got a kind of swap rates calendar on our website that's usually good to keep track of it. But things can get weird when you have these midweek holidays, and you'll see it reflected in the rates. What I always tell people is actually doesn't truly matter, because if I hold a position for a week, I'm going to get 7 days of overnight funding no matter what. So obviously, if you're closing intra-week, it does affect your trade.
It's more, it's if like you're day trading or swing trading, and it's like, oh man, I've got a trade that's either unchanged or it's slightly in my favor, it's slightly against me. It's not where I want to take it off for a profit or loss, but like it's Wednesday late afternoon. Will I take this into the close just because I've got a little bit? I'm getting, we looked at this dollar yen. I'm getting 4.5 points potentially. These are indicative values; they can change, versus the normal day of 1.25 or 1.30 or whatever it is. But it is worth noting, if you're looking at any yen pairs like we looked at just now, or Swiss franc pairs, that Aussie Swissy pair that we just looked at, it's not the biggest. But Australian rates are still, I believe, in the 3% handle, and Swiss rates are still essentially zero. Japanese rates are still close to zero. So that's where the carry trade gets interesting. And so a bunch of different dynamics. Man, great stuff to walk through here, Paul. And just as a last piece, you have CPI coming up in 30 minutes, and we are looking at core inflation a little bit higher than it was last month. You're seeing on both the month over month and year over year. That's the expectation. Headline inflation number also expected a little bit higher than last month. We'll see where it comes in, Paul, in just a handful of minutes. Thanks so much for joining me, man. Always a pleasure.
Thank you.
And you've got Tom, Tony, and Bonetta coming up next. Stay tuned. Peace.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this Tasty Live site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport